Hello everyone, what's up? This is your tutor here for accounting in Igcse, tutor Alvin Kwan from TTC. So, what are we going to discuss today? Let's see. So, we are going to discuss about the trial balance and a little bit of our financial statements. So, we have discussed about analyzing business transactions through business documents. Then we have to record each document's details, into the journal entries, meaning the books of prime entry. We have the journals, the cash book, and also the petty cash book. Then after that, at the end of the month, we do the classifications of all totals into the correct group of accounts in the ledgers. When we total up the ledgers and we bring down the new balance, we will prepare a trial balance. So what are trial balance? So trial balance is a list. Okay, it's a list of balances. Okay, it's a list of balances of the accounts from the ledger at a certain date. Normally, in the exam, we can see a trial balance that is made up at the end of the year. It can be done every month. Of course, every time when we want to close the accounts at the year end, we will have a trial balance for the year end. So keyword is a list of balances of accounts from the ledger at a certain date. So what is its functions? It is for a checking in arithmetical accuracy of the ledgers. Okay, bookkeeping, which includes the journal entries and also the ledger preparations. Now, this trial balance can also help us to detect any errors. How to detect these errors of our calculations? Meaning, it is during when our trial balance does not balance. This is a nightmare, guys. When your trial balance doesn't balance, you'll be like, it's not balanced. So, must be somewhere the error happens. In your ledger, you have to go backwards, You have to check your ledger, anything is written wrongly. Your journal entry, is there anything wrong? Is there anything wrong in your journal entry, which means you have written wrong values from the business documents? For example, 100, we written as 1,000. And from here, 1,000, we see again wrongly, we become 10,000. Oh no, that's a huge word, guys. Okay, so we check the accuracy and also detect any errors. And later on, assuming for now, there's no any adjustments to be made, perfect scenario, we can prepare the financial statement. Okay, financial statements preparation will be done easier. See. Okay, so this is what is trial balance and how it helps us. Now, so let's say our ledger, we have multiple accounts here, all the assets accounts, we have a debit balance, liability accounts, all of them. We have credit balances, all the, what we have a capital account, a credit balance, and what else we have? We also have income accounts, all is credit balance at the end of the day, meaning what? The balance brought down figure. And then for the expenses, we have a debit balance. Then our sales, we have a credit balance because inventory go out, so we call it sales. Other than that, we also have our purchases, which we buy things in, so it has a debit balance, our inventory come in. Then after that, we also have contra accounts. Contra account meaning it will bang and reduce the main account. For example, we have the ones that reduces our capital account is our drawings. Drawings will fight with account, so you go the other side. You see here, capital will have a credit balance, so drawings will have a debit balance. Now sales, we have a sales return account, or sometimes they call it as the return inwards account. Sales is a credit balance, so sales return will have a debit balance. For purchases, we have purchase return, or sometimes they call it a return upwards. It will be on the credit side. And we also have another two more, which you'll be learning later on. Yeah, really, later on. So these two accounts will contradict the assets. One of them that it will contradict is our trade receivables. We have a provision for doubtful debts, meaning we are thinking whether this debts in the near future, the coming 1 year, we'll be able to get it or not. So we do not know. So we just we provide a vision for something that is very doubtful. Yeah. So it will be having a credit balance. Okay, this is for our trade receivables. Then another our assets, especially our non-current assets, we'll be having another kind of a contra called the provision of depreciation for whatever non-current asset. Meaning we provide a vision that our asset year by year it will go older, and so it will speed. I'm getting older. Provision for depreciation. Okay, so it will fight with NCA. So these are the 1, 2, 3, 4, 5 contra accounts. All right. So now let's say all of these ledgers here, all these accounts here has a value. Okay, all of them has their own value. We need to make sure they have the balance that they should be at. Okay, expenses on the debit side here. All right. So at the end of the day, we will prepare trial balance. So our trial balance, I think I have enough space over here, will be like this. So let's say we have a company's name, ABC Limited. Then we're going to write it as a trial balance at 31st December, let's say 2025. You want to make it a T format? Also can. Okay, so here we have the debit side and the credit side. We're going to write all the assets account, trade receivables, your non-current assets, your premise, your fixtures and fittings, motor vehicles, all you list them one by one there. But because I do not provide for all these, so I just combine them, all of them called the assets, yeah? Okay, but in real, we have many assets to open. So here's the figure you're going to write. Okay, and then our liabilities will be over here. Remember again, it's a debit and a credit, so both sides will be the same. Then we have our expenses here. Expenses can have many kinds of expenses. We have the wages, salary, rental, rates. Rates is for your electric bill, insurance, yeah. And then we also have our income over here. Now you might be thinking, why expenses on the debit side and why income on the credit side? Okay, isn't it income should be on the debit side? Okay, before that, we think about, let's say we get money, right? We got an income. Okay, we get an income, let's say cash sales. Okay, so income, other than the income, we also have the sales here, which is actually part of income, but we separate it as well. You get the cash sales. So, okay, not say sales then. We say, okay, rental receivables. Rental, we receive rent from our tenant. So we debit our cash, right? And then what should be credited? What is this about? It's about rental, receivable, your income. So we credit it. So that's why income appears on the credit side. Expenses, if let's say you pay insurance, okay, we pay insurance by check. Money go out, right? So we credit the bank, correct? And then what to debit? What is it about? That we pay the money for? An insurance, right? So we debit the insurance. That's why expenses is on the debit side. All right? Okay. Then the purchases. Purchases is a kind of expense also though, but we have to split out because it's related to our inventory. And then we also have our capital over here. Our resources. And we also have what else? Okay, asset liability. Okay, now we solve the contra. Okay, sales return. Then we have purchase return. Then we also have our drawings over here. Then the provisions of doubtful debts, provision for depreciation of NCAs. Okay, debt free will do. Okay, so the total must be same for both sides. Okay, this is the T format. Okay, so if one of the side here is not balanced, that will mean there's an error. Later on, we'll be talking about suspense accounts and the errors. Okay, correction of errors at the end of the year. There's one video later on that we're going to talk about that. Okay, so trial balance can be a T format, or we can make it into a columnar format, which is normally the case that what you'll be seeing. So let's say again, we have a ABC Limited, then trial balance at 31st of December 2025. You can have it like this as well. Debit corner, and then the credit over here. So again, the same thing, all the assets, you just copy all everything down. Sales, purchases. Okay, then what else? Okay, assets will be here, liabilities will be there, expenses here, income there, sales over here, purchases over here. Okay, then your capital over here, purchase return be here, sales returns will be all here, Then our drawings will be over here. Okay, what else I'm missing? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, that's another. All the provisions. Provisions for doubtful debt, provision for depreciation over here. So this is what normally you'll be seeing in the exam, a columnar format. Okay. Now, using this list, we are able to produce our financial statements. Financial statements, one of them is our income statement. Now, I'll let you see one of my notes here. So income statement, this is one of the sample. This one's very full-fledged. Okay. So we have income statement for the year ended 20-9, 31st December. So income statement is a statement that shows our performance for the year for our trading and also our general administration part. The first part here, we have revenue minus cost of sales. That will give us our gross profit or loss. This part will be our trading section. Okay, as in our trading with customers and also buying things from our supplier. Right? So income minus our cost. Revenue is a kind of income. Then minus the cost of sales is our expenses to buy our products. Then the differences will give you the gross profit or loss. Okay, meaning the income you earn, the net income that you earn from your trading, buying and selling. Then you add on the profit and loss portion, which is we add other income and minus the expenses. Normally this one I call the administration. It's not in front of the shop, it's behind the back end office and behind the shop. Okay, all the computer works, admin stuff, other extra income, any general expenses, the day-to-day and also some one-off thing. Then we have profit or loss from operations, meaning your day-to-day profit or loss, general ones. Okay, then we will be minusing off loan interest, then you'll be getting the real profit or loss for the year. Now, this is only for your standard, for year 11 standard. Later on, once we all moving to our tertiary education in college or university, your income statement will be known as Statement of Comprehensive Income, SOCI. And format will be more or less the same, but there will be even much more things below here. More also later on when you are learning about business combinations, meaning they are group accounts, we call it. Format is a little bit different. You can download an annual report from any of the from any of the companies in Google. You can try to find. Then you will see a real SOCI, the income statement. How is it look like? Okay, you can go find any top 500 listed companies in Malaysia or any parts of the world out there. You are able to see that. It's a little bit different. It's much more very, very, very low. So this is your income statement. Then, yeah, we have the horizontal format, but most of the time in our exam, we'll be using the statement format, which is the vertical format. Okay, horizontal format is the key account, basically both sides. Okay, so this one you can have a look here. Okay, service industry doesn't have products, so there's no such thing as a sales or revenue, and the cost of sales straight away will be a fees receivable. Okay, or service rendered receivables. Okay, pretty much the same. Then we also have our statement of financial position, SOFP. Basically, it talks about our status in the company as how are we doing? Are we doing fine or are we facing financial distress? Now, we all know cash is king. So if let's say your cash bank, very tiny, then you might be having some sort of trouble. Okay, because most of the money could be stuck inside your closing inventory, or a lot of your customers, your trade receivables are owing you money and they haven't paid yet. So you have to, get back all the money and sell as much as possible from your inventory. Okay, so non-current asset and current asset on the top. Okay, then we have the total. Then after that, capital and liabilities. Still remember asset equals to liabilities plus capital. Left hand side equals to right hand side. The T format is over here. But normally in exam we do columnar format. We do have 3 columns and we do it as a statement format, top to down. So the left side portion, the asset will be at the top, and then the capital liabilities portion will just move downwards. That's all. Okay, we have it over here. So there will be a lot more to learn later on as we go into things such as the prepayment, the accrued income, accrued expenses. We'll be talking about that later because that is on the adjustment parts. Okay, so these are financial statements that you'll be mainly learning much of them during your year 10 or transitioning in the beginning of your year 11. Okay, so that's all from me here today, guys, and I hope it can help you all. All right, so see you again in our next video, and adios. Mucho gracias.